Today we will discuss the 7 effective ways to pick good quality stocks. Embarking on a journey to pick stocks can be very daunting, but fear not. Here are the 7 effective ways that will help you to pick stocks seamlessly. The first point, set clear goals. Defining your investment objective is very important. You have to understand whether you are a short-term investor, a medium-term investor, or a long-term investor. Each of these types have their own ways to pick stocks. The second point is assessing your risk tolerance. Understanding whether you are a risk-averse type of investor, a risk-seeking type of investor, or a risk-neutral type investor. A risk-averse investor avoids taking as much as risk possible and invests in stocks that are very safe. A risk-seeking investor invests in stocks that are very aggressive and that have a very high risk to reward ratio. And a risk-neutral investor has a balanced portfolio where they are okay to take some risk and okay to not take some risk. The third point, invest only in what you fully understand. Avoid investing in complex financial instruments and industries that you do not understand. Because if you do not understand it, the chances are that you will lose a lot more money. Avoid also getting tips from people that have no substance and that can be very detrimental to your entire portfolio. Make informed decisions by investing in companies that you are familiar with, by big large companies that you probably see around when you go out every day. The fourth point, analyze the company's fundamentals before investing. Here are some crucial points you should look at while analyzing the company's fundamentals. Revenue growth, profitability, the debt levels, the cash flow management, and the management's efficiency. These points will help you understand the growth of the company and how the company has grown so far. The fifth point, be aware of traps. Be very careful of people who come to you with penny stocks. The price may seem very attractive, but the company may not be so good. You have to understand the company in depth when you're investing in these kind of stocks with low prices. You have to look at the management's position, how competitive the industry is, where does that company stand in the competition, and many other factors. Always stay away from penny stocks. It is not good for your portfolio. The sixth point, be very careful of high dividend yielding stocks. High dividend yielding stocks may seem very attractive but can have an underlying threat. You have to look at the factors such as, can this company sustain paying dividends year on year? Do they have the right amount of cash reserves? Do they have the right kind of cash flows to continue to pay such dividends? And can they also pay these dividends at these current levels if there's an economic uncertainty in the future? These are the questions you must ask while buying dividend yielding stocks. Prioritize investing in sector leaders, top performing companies with competitive advantages and strong market positions. Investing in these kind of companies can be very beneficial for your portfolio, as these companies have seen constant growth year on year in their profits and their sales. It is always important to invest in these kind of companies. By following these guidelines, stock picking becomes easy. Be very disciplined, align your goals with your risk tolerance, and understand the type of investor that you are. You have to be well read. You have to always question every single tip that is given to you. You have to be able to research thoroughly into each of these stocks using market tools available online, and then decipher whether you are capable to invest in this company or not, or whether this company suits you or not. All these factors will help you reach the right stage in stock picking.